Good everyone, it's Sam here from the Bailey's Insights team. Today I'm joined by Matt Lamb, the National Director of Office Leasing. So how are you doing today, Matt?
Yeah, great, thank you.
Yeah, awesome. So we have recently released our New Zealand office market update report for 2025. So this is pretty exciting. So we've got Matt here and we're just going to go through a couple of the topics that we've covered off in the report. So first off is that flight to quality and kind of how you're seeing that pan out with the current environment where businesses are thinking about their cost efficiencies, where there's kind of lower business confidence.
Yeah, look, I guess it depends what sector you're in, really. There is definitely a drive at the moment, and there still is for that flight to quality if you haven't actually exercised or done that since COVID.
Yeah.
So we are seeing a lot of tenants that are still striving for that. In particular, part of that drive is, of course, getting staff back into the office. So, if you haven't done it yet, you are exploring it or definitely considering it heavily. That said, as you pointed out, the economic side does influence a lot of that.
Mm-hmm.
And we've seen a lot of them as probably mid 5 to 1,000 square metre tenants. They're sitting still at the moment. They're just looking for that economic climate and what's going on. Interest rates, of course, hopefully will be falling. And, we're expecting probably this year or later this year that there will be a sort of a surge in the movement or more positive.
A bit more action.
Yeah. Positive action for that flight to quality.
And are you starting to feel the pressure of some larger organisations kind of calling their staff back to the office or putting in some controls on time worked in the office?
Yeah, absolutely. There has been, and once again, it's down to the sector. So banks are definitely enforcing that. We've seen most of the banks, if not all, now asking or requesting their staff to come back at least 3 days a week.
Mm-hmm.
And we're knowing, or the way that they sort of gauge on that is by monitoring basically the logins at work or access cards. Mm-hmm. So that's how they're sort of gauging that. We do hear other businesses or sectors saying you must come in, and they're not yet working out how they're driving that.
Right, so kind of early days of that, but we might start to see that putting pressure on demand for space in the market?
Yeah, look, absolutely, correct. And we are starting to see spaces fill out again, which is really good. There's still quite a bit of sublease space in the market and huge advantages to be taken off still. But we are seeing a lot of those spaces starting to fill up. But once again, it's per sector really. We are seeing, just for instance, we are seeing like the IT software sector that they've probably been hit quite hard. But part of that is because a lot of those workers like working from home. They don't need to work in teams.
Yeah.
They're very happy in front of the computer, being
IT so those kind of things have kind of changed the way things are working in the market right now. And if we were to talk about the rental outlook, where are you seeing kind of your modern and dated rents moving for this year?
Yeah, look, definitely there's a two-step market. There's no arguments there, and the divide is getting bigger and bigger. Mm-hmm. Of course, the vacancy rates are reflective of that also by the secondary stock or the stock that's not fit for purpose or sustainable as such is really suffering.
Yeah, so kind of in line with that flight to quality.
Correct. And it's very hard. Any business that is looking to move, of course, they're not moving sideways or backwards. They're always moving forward in terms of better quality space, location, so on and so forth. So we are seeing that the fringe, of course, is in a lot of the cities has suffered a lot more than the cities of trying to get staff back and the amenities and public transport that provides. But in terms of the rentals itself, good stock, prime stock, A stock is all looking really healthy.
Pretty competitive market.
Yeah, very competitive market. Incentives are low, of course. There is just, as part of that, a big drive for fitted spaces versus a base build where tenants have to fit out themselves, and that's a capex mechanism, of course, where the money is coming from.
And for that dated stock, you're seeing a bit more incentives and things like that to get things going? Yeah,
landlords, look, they have to come to the market. They're competing against some really good stock, and particularly sublease space, and those sublease opportunities are typically fitted, and a lot of them actually very well fitted. They haven't only been fitted in the last 5 years.
Right.
So there's really good advantages to be made there for tenants to make a move and take advantage.
Yeah.
And that's that secondary stock, that's what is competing against. So any landlord with secondary stock really does need to put their or pull their socks up to try to do the deal and get it across the line.
Right. Yeah. And I guess to wrap up, kind of wanted to give an opportunity for you to give your advice to some tenants and landlords right now who are unsure what to do in this current market.
Yeah, look, I mean, it's a minefield out there. There's no arguments about it. There's a lot of stock actually that's not actually physically on the market or being promoted that we know of course, and there may be because of sensitivities behind that. But look, I advise any tenant, of course, to come out early. Don't come out late. It is a process if you want to do it right, and to make sure that you've covered every stone. But come and talk to us.
Yeah.
We know what we're doing. Of course, it's our job. There is a formulated process which we typically all follow. But to really do justice and get the right solution, come and talk to us, and we can guide you through it.
Yeah, awesome. So thanks for that advice, and thanks for joining me today, Matt.
Pleasure.
So, yeah, we'll catch you guys next time.
Great. Thank you.